Right. Good morning, everyone. Welcome back to our morning cuppa at 8. I'm Joseph here. So yesterday, looking at the Hang Seng Index, it underwent a very strong intraday rebound. You can see that initially, right, the Monday sentiment was negative, or it went below the 50 days moving average. Then on it bounced off the 25,000 point level and closed above our support level. So right now we still keep a bullish bias on the Hang Seng Index with our stop loss point set at 25,000 point. Right, and you can see that yesterday, based on the Hang Seng Index, these are the Hang Seng Index members, and over yesterday, right, a few stocks are quite good for considerations. If next time selling pressure happens again, right, we do see the banks defensive, right, are coupled with the telco such as China Mobile. So you can see that yesterday our technical peak was actually the 1398 and 941. So yesterday we managed to fend off a little bit of a selling pressure, and that is the two defensive counter that we had. And over the day, right, the market rebound was led by the tech stock as well. You can see that Tencent, despite that yesterday closed lower, it does have a long lower shadow, and 981, which is the Chinese SMIC, Zhongxin Guoji, right, have a return of 3% as of yesterday, right? So this is the Hang Seng Tech Index. I can see that among all the Hang Seng Tech Index, the SMIC together with China Hua Hong 1347 have give a positive return. There are another two more counters here as well. So during the night time, right, at the US market, HXC, you can see that they actually have a gap up, right? Once the Hong Kong end at the afternoon, right, in the evening, right, the sentiment start to actually become a calmer. Market is seeing that there's a possibility that Trump will patch back with China again, right? As we also know that end of this month, October, the CCP is going to have their fourth um, uh, meeting, which they're going to decide their next committee member for the next few years. So that's actually one of the very critical meeting that the CCP has, and I think that that will actually move the sentiment in the market as well, right? And so we didn't make any changes to our watch list so far. Um, as right now, right, as we ready for the market rebound, I think that we should pay more attentions to the big cap counter, especially the index member. So this morning I'll use a Tencent as uh, example. So you can see that Tencent right now is trading at the 630 level. So yesterday it actually opened lower, but then on it managed to bounce off 630 and close at 639. So today I would like to see Tencent to have a follow through price actions to at least climb above the 20 days moving average. Okay, and at the Europe and US market, right, both sentiments remains positive, right? Especially the US market, S&P have a gap up yesterday as well. So over here, you can look at the heat map that I get it from TradingView, right? You can see that the under the S&P 500, most of the stock that actually stage a rebound is actually tech counters, right? If you recall last week, what the Trump wants is to have charge on the ships that enter into the US, and then on he also imposed a new rule that actually limit the export of technologies to other parts of the world. And what we do see is that the tech stock have suffered a very strong corrections last week, and since the sentiment has become risk on again, right? The tech stock have a very strong price action as of yesterday. So Nvidia, Avago, and Google have give a very strong return, as well as some of the bank stock such as Goldman Sachs, JP Morgan also have a positive return yesterday as well. So to capitalize on the S&P 500, you can actually look at one of the ETF, SPY, Spider, that actually track the performance of the S&P 500. Okay, and Trump yesterday have signed out a deal with the Middle East leader that declared the phase one uh, peace agreement that reached between uh, Israel and the Palestine. So, looking at the commodity, right? Crude oil have actually plunged below the $60 last Friday. Based on the technical setup, bears are in control right now. So on the upside, resistance will be 62 and followed by the 65. Downside support is 57, followed by 55. Meanwhile, gold as of yesterday, Monday, right, continue to actually move higher. At this time, when we speak, right, the COMEX goal have break past the 4,001 level, heading towards 4,002 and followed by the 4,004 level. Okay, and another news headline that I pick up, right, is that JP Morgan is going to invest 1.5 trillion over the next 10 years to a few sectors that they think are critical for the US national security. So one of the stock that mentions was MP Materials. Now, if you follow our Monday, the technical, which is yesterday technical piece, right? We do mention about MP Materials, which they are going to be involved in the rare earth mining in US. And you can see that share price have reached our first um, the R1 98 and then heading towards the 100. So breaching the 100, it should easily move towards 115 based on the momentum that we see. Now, another peers to the MP Materials would be the Ramaco Resources, METC. We first discovered the stock in the early of August, and this is where the stock have consolidated, and right now METC is on a very strong rally so far. Now, if you want to look at some of the pullback stock, I think another counter that we should look at is actually Coinbase, which stock code COIN. So based on the price volume profile, you can see that a very strong support is at 350 and followed by 315, right? As long as stay above the 315, I think overall technical setup still favor the boost. Falling below the 315, then that will see the negative setup. But right now, I think overall setup remains positive, despite a mild pullback for the last 2 days, and that gives us opportunities to buy on the dip. Right, and as for Malaysia market, FKRI yesterday we opened lower, but at the end of the day, managed to stage a rebound, close at 1612. Overall setup remain positive, and our stop losses are 1535. Now, FCPO after the MPOB data release last Friday, are still struggling to stay above the 4,005. Right, we're going to see that coming to the next month when the contract roll over, whether the FCPO can sustain above 4,005. Right now, we keep a bearish bias on FCPO until it breaks past the 4,006 resistance. Okay, as for the Malaysia trading stocks, firstly, we'll be looking at Binastra, testing the 2 ringgit and 30 cents resistance. Breakout, which see the Binastra climb towards 2 ringgit 43 cents and followed by 2 ringgit and 50 cents. Downside support is 2 ringgit and 20 cents. Secondly, we have the Malakoff in the energy sector that utility sectors that break past 1 ringgit and 5 cents. So after it break past the resistance, Malakoff climbs towards 1 ringgit and 12 cents, followed by 1 ringgit and 17 cents. Downside support will be at 1 ringgit. So we have one pending breakout, Binastra, and one of the breakout stocks, Malakoff. So I'll stop here and pass on to John on the utilities sector report. Thank you.
Right, thank you, Joseph. Let me move on to utility sector now. So we keep an overweight call on the sector with the top picks as YTL Power, TNB, and SolarBase. Overall, we remain optimistic on the sector's growth trajectory, coupled with its resilient and defensive earnings profile. With several key initiatives in place, the RE sector continues to chart strong growth trajectory. We expect these developments to drive earnings visibility and order book replenishment for solar contractors over the medium term. To recap the preceding quarter results of the 9 stocks under our coverage, 1 beat expectation, 5 reported inline results, while 3 missed expectations. TNB earnings fell short of expectations mainly due to a higher taxes following the ceasing of their reinvestment allowances in 2025 and the absence of a 213 million ringgit hyperinflationary accounting gain from an overseas associate last year. And then the demand for electricity recorded a positive growth year-on-year in the first half, mainly due to a stronger commercial growth that fueled by data centers, business services, and retail consumption. Riding on a stronger first half, TNB expects the growth in demand to be at a healthy 2.8% to 3.8% this year. And also from Budget 2026, we understand that the introduction of a carbon tax remains on the card. We expect emitters with a significant carbon footprint to face earnings pressure once the tax is implemented. Within the sector, TNB would be the most impacted, followed by Malakoff and Petronas Gas. Should the carbon tax be passed through to end consumers, it would likely lead to a higher electricity bills while accelerating the shift toward renewable energy adoption, as corporates will seek to mitigate the rising power costs. Despite the impending rollout, we expect the carbon tax to only take effect by late 2026, as there are still no details on the charging mechanism and the scope of emissions, like whether Scope 1 or broader scope will be taxed at this stage. Meanwhile, we do not foresee it being a heavy tax, as we see the government's intentions appears to be promoting sustainability among high emitters instead of generating fiscal revenue. Also, we see the solar theme remains hot. Budget 2026 confirmed that LLS6 will be implemented with a total capacity of nearly 2 GW, involving an estimated 6 billion ringgit in private investment. Collectively, LLS5, LLS5 Plus, and LLS6 could bring over 6 GW of solar capacity to the market. In our view, this translates to an 18 billion ringgit worth of EPCC opportunities. And then, to update you on the data center, as of June 2025, their total capacity related to Energy Services Agreement, or so-called ESA, has expanded to 6.7 GW from 6.4 GW in the first quarter. There were 24 data centers projects completed with a total cumulative capacity of 3.5 GW. In terms of TNB capex utilization, the regulatory capex utilization stood at 43%, which is around 5.2 billion ringgit, while total regulatory capex could reach as high as 12 billion, including 1 to 2 billion of contingent capex. Some of the demand growth triggers, including data centers, the East Coast Rail Link, and government projects like school and residential, etc. Moreover, Budget 2026 also mentioned policies like Solar Atap, Green Technology Financing Scheme 5.0, and the Corporate Renewable Energy Scheme CRESS. Solar Atap is set to launch on the 1st of December, replacing the existing Net Energy Metering NEM scheme, which is expected to contribute up to 500 MW in additional solar capacity. We see the Solar Atap is set to sustain the momentum in solar adoption and drive continuous order book replenishment for solar contractors like SolarVest and Semaiden, which supporting the growth beyond 2025. Valuation-wise, the Bursa Malaysia Utility Index is now trading at a 15.3 times forward PE, which is about 1 standard deviation from its 10-year mean of 14 times. We believe this premium reflects the market optimism on their long-term earnings visibility, underpinned by a structural rising electricity demand. In particular, data center, commercial services, and a wider digital economy are driving a step up in power consumption. That's all from my side today. Happy trading and see you again tomorrow.